Hi, good morning, everyone. What a morning to be talking about crossing the Atlantic. So thank you. I hope you got lots of coffee and lots of energy in you. But we have some amazing founders joining me today. So first, we have Frank, who is the CFO and co-founder of Raising, which is a savings marketplace, if you join us. And then Chris, who's the head of growth of Clio, a brilliant UK success story and AI-based financial management tools. Sorry. So while I get this up, maybe we could start with the two of you. If you wouldn't mind telling us just a little bit of context to start with about your US expansion, when you did it, how you did it, and what you've learned.
Yeah, I can kick off. So Clio first went into the US in 2018, but in 2021 we decided to fully pivot the business from being UK and US split to fully over to the US. The driver for that was mainly that the problems we were trying to solve in personal finance in the UK were amplified in the US, that the system was starker and the problems, we felt the opportunity because of that was bigger. And we had confidence that our product had higher product market fit in the US than it currently did in the UK. So we shifted across the entire focus and made US our number one only market. And from that, we've been able to kind of consistently grow more than 2x a year in the US.
So maybe on Raisin and what we do, because that might define on why we went to the US. So we're a marketplace, so we offer consumers the opportunity to place all of their cash deposits and savings in an insured way with deposit-taking institutions. So the product itself is probably as old as the banking system, and every one of you would have some sort of form of instant savings account or overnight money or term bond. And we started that in Germany. And it took off quite well, despite a very difficult market environment for us with rates falling and then eventually turning negative and like banks really not needing any additional incremental liquidity. But everyone who was talking to us in the early days was saying, hey, this is a German thingy. You know, like Germans love to save their money, they love to bring it to their savings bank, and it's never going to be something international. But the idea for Raisin was always to be a marketplace that works in all Western European economies. And the US actually, to us, is the largest of those Western economies that has not seen any specific innovation on bank deposits. And the usual argument we always heard is, that's because this is an investment economy and people put in everything in stocks and 401k plans. And when you look at the statistics, and you see that there's 17 trillion in bank deposits held by US citizens in that market, and it's the largest one. And so we decided in 2019 to actually build the US team. And it took us more than 3.5 years to really get to product market fit. And then it did scale, and it did scale quickly. It's now more than 10% of our business, and even larger than what we operate in the UK, which was our first non-domestic market that we launched.
So you're both saying that the US is a more broken market for consumers and therefore lots of opportunity. But also, obviously, the US is a massive economy, a massive market. As a European founder, you can't ignore it. But maybe just to address the reality, the fact is you look at the neobanks, N26, Revolut, Monzo have all at various points failed in their US expansion plans. You look at like now some of them doing very successfully. You look at B2B players, in MySpace like fraud and things like that. Very few European companies have expanded. Maybe some exceptions around payments, but outside of your success stories, why do so many companies, fintech companies from Europe, expand to the US and fail to do so?
Well, to me, it's the question of why are you going to the US in the first place, right? Is it because your investors would love you to be more global because it fits nicely into the equity story, or you need the next growth market because there is a kind of impediment of growing further in your home market? Or is it something that you really believe will change the perception of your firm and will get you to the next 10, 15, 20 years of growth? And ultimately, I think some of these moves had been opportunistic. And I mean, it's a huge market, huge scale, but you can also fail at scale, to be honest, if you go there just for the sake of appearing larger than you actually are.
Yeah, I think the only thing I'd add to that is that focus. I think we saw this is that it's got to be the number one thing you're going after, I think, to crack the US. I think doing it on a side part of the business, we're going to have a GM or something try and run that problem for us, I think doesn't work effectively. I think that is often the case, whereas if you make it the number one focus, I think that can be successful. I think the only other part is ensuring that the problems you're solving and the product market fit you have does translate. There's a lot of competition in the US, so just trying to port it over from less competitive markets often also leads to failure.
And then the US is singular in that way, different than other countries you've expanded to? but it's kind of an unfair thing to say, like, you have to really focus on this one thing. You have to make it a core part of your strategy. Like, a lot of companies do international expansion and should be planning to at some point.
It can work with the GM, but it needs to work with a deliberate set of what you want to accomplish in that market. And so, of course, when we crossed the channel to enter the UK, we thought we know Europe, right? And so we came here and we brought a lot of things that worked in continental Europe, which didn't work in the UK because it's also a very different market in terms of payment systems, in terms of wires, and in terms of how people interact, what they expect from their banks, how they are outspoken, and also regulation, treating customers fairly, and like there's 2 regulators taking good care of consumers. So it's very different even within Europe. And the scale is so much different in the US that mistakes you do or strategic shifts you're not really clearly seeing will hit you harder. And you need to be prepared for that because, as CFO, I'd look at this and say, hey, this is burning money. This is going to burn money next 3 years. So why are we doing it? And there needs to be some sort of form of conviction around the why. And otherwise, it's just you'll burn money and you'll eventually stop doing it.
I guess, we have a lot of founders here in the room. And so it's easy, where you're sitting now, to talk about why the US market is significant to you, how it performs to your business, why it's, how you've dedicated resources to it. But maybe rewinding a little bit, there's the day one problem where you're sitting, in my chair and you're thinking about, it'd be nice to have some US customers. I'm told there's a big market there. Like, where do you start? Where did you start? And where would you advise people in the room to start today?
Yes, fair point. So I think we started pretty small, to be honest. So we kind of started where we thought we did some, it's getting a bit granular, we did some testing of where we thought we had the best product mix geographically within the US and found that in Southeast for us was strong. And so we started off there relatively small to try and get an understanding of what is the kind of levels we're playing within here. Like before we go big and to your point, fail at scale, it was can we actually get some conviction about what's going to work and how we need to message our product differently here to where we're in the UK. I think doing that kind of smaller scale, kind of 3 to 6 month period really laid us up to hit the ground with a bit more.
Can I get one more click more precise though?
Yeah,
because,
please.
Testing is great. We all love testing. It's great. But in financial services, you have to deliver a financial product, which typically requires a regulator to have approved you and things like that. And so what does testing look like at Clio?
Yeah, so I think there's a slight difference there in that we'd already had a US app. So we'd already done the kind of the infrastructure hard yards kind of in the background over many years. And it was actually at this point when we wanted to launch that it was more the marketing side of the testing that was understanding, actually on the channels, going out and talking to people in the US, where does our product land, where doesn't it, and what do our unit economics look like in the US? And that was really getting firm on that to then go big and put the kind of the big money behind it, I guess.
Yeah. So you did the regulatory piece years before, and then you started testing at a marketing level before then investing in actual sort of product build. Yeah. What about for you?
So the US, so maybe comparing it to the UK, we realized there was Brexit a couple of years ago, and so we understood that we needed to have a local presence, so we couldn't do this cross-border by EU passport. So we ended up acquiring, and that was our first inorganic transaction, a team based out of Manchester that was running a similar type of product within the UK. And that turned out to work quite well. So when we were looking at the US, we thought of, hey, let's do the same thing and find someone who's actually doing something in savings and deposits. And we found a team. The team is still with us. They're really, really good. But we found a team that we thought could shortcut this kind of market entry. And we acquired a small tech firm in Madrid that had delivered something on the savings tech platform for the US market. And we thought we could just replicate. But then we went to the US realizing it's so much of a different market that it just, as I said earlier, it took us a couple of years to find product market fit between B2B2C and B2C propositions. And I think there is no shortcut to just go there and learn. And learn means talk to those who've done the same and failed or succeeded. Because the sheer amount of advice you'd get as a founder, if you even consider going to the US from your investors, will be overwhelming. But it's not really necessarily helping because they might not have built something in the US. So the best advice they can give you is think about their list of portfolio companies who tried and failed and say, you need to call those 5 guys or those 5 people because they could tell you much more about why it didn't work out. And so that's the first one. And the second one is patience. I'm not necessarily a very patient person, but it does help to not start spending money early on before you really understand how it kind of works in the economics, because you could also scale quickly, but you can fail at scale as well. And having spent 1 or 2 financing rounds without even really figuring out product market fit in the first place.
Yeah, it feels like inorganic growth as a mechanism for international expansion doesn't get that much attention. And so could you share with us kind of the financial considerations you had around, effectively trading equity or cash? Any numbers you're willing to disclose, but just kind of the trade-offs you had to think about around like buy versus build, and then secondly, kind of the cultural implications of that, of suddenly buying a different team that's operating in a different market.
Yeah, so it's always difficult to inorganically shortcut growth cycles, but so it did work for us because we've done it a couple of times, and we kind of learned that at closing, actually work starts in terms of integrating teams, in terms of getting them aligned. And so the one learning is to talk about every pain point before you sign documents, because otherwise they'll come up eventually afterwards, and it's much more difficult to solve them then. For the team itself, this was a small tech hire, so it kind of that worked. It wasn't transformational in terms of revenue contributed to the firm, but it just helped us to focus. And it was an investment that we made that helped us saying, the US is important to us. We want to get it done. It might take a while, but we really want to succeed there. And it's not just sending someone as a GM and say, like, figure it out and tell us what we need to do differently so that we can deploy marketing dollars, because that mostly doesn't work.
And then, Chris, obviously you have the entirely opposite mandate, which is organic growth in the US, and you're overseeing huge spend there, but you're doing that from the UK. And so how do you get those kind of market learnings to keep reinforcing the strategy?
It's an interesting one. You have to be you have to be very deliberate about it. Like, you're not going to kind of organically just like soak it up because you're not in market. So I think we've hired really specifically across the East and West Coast. So like a lot of our on-the-ground marketers are US based, and I think you need that, and then you need to have like systems within the company to make sure they are feeding back insights and upskilling everyone who's in the UK about like the latest, kind of keeping everyone on the zeitgeist, because it's very easy to fall slightly off there. And I think like we put a lot of time, a lot of energy into that problem to make sure that we stay, that like our marketing efforts stay very relevant in the US.
So I'd say, so for some of the teams, it does not really matter whether you're sitting, whether it's East Coast, West Coast. We have our customer care operations partially in Utah, but also service to some extent out of Manchester, because it works just much, much more efficiently. And so it doesn't matter. But what does matter is that someone has done it before and is US based and is actually having scaled in a similar format businesses within the US and has experience. So we had a couple of US CEOs. We thought that worked out quite well, and it didn't work out until we find someone who scaled businesses within the US and brought in that experience. And the same on business development and marketing. You cannot just bring someone from the European market and say, hey, you've heard about performance marketing, do this, and it will fail. You need to have local talent. Where they sit is second order effect, I'd say.
Do you have a different take?
No, I think in many ways I agree, right? Like, I think on where you need the organization to be, like, I think we've got 70% of people still in the UK, and like, that works much better. Like the cost effectiveness of hiring people in the UK is massive. Like, we have a lot of data scientists. It's an AI-driven app. Like, and the cost and the ability to get people is just vastly improved in the UK. So that's where we're going to stay. I think the bit where I think maybe we don't quite line up is that I do think from some of the marketing side, you do need a spread across. Or we found it very helpful to have a spread across the US to get like some of the local differences and like some of that into the company. So I kind of agree, like you don't need everyone there, but I think we found like that having some of those marketing roles, particularly on the brand side, to be like very impactful.
Can we also define the US? Because obviously there's lots of states. I'm not sure if do you actually operate in all of them? How did you think about state by state?
Yes, I mean, for us, it's, again, the beauty of the product is the same across every single state. It's a term bond, term deposit, or overnight money account, which everyone is used to in every of those states. So that doesn't matter in terms of how you market the product. There is, of course, nuances and differences, but it's not comparable, I think, in our cases, because the product is much more harmonized. And so for us, the US is basically on the consumer side, wherever they come from, it does not matter to us. And on the deposit-taking institution side, of course, they have their home states. But ultimately, we fly to where they are and like get them on board. It does not matter to us, not much of a difference. Regulatory landscape, of course, is different and is much more fragmented than what we would have thought when we entered the US. That is true, yes.
Yeah, it's actually quite similar. So our product is the same across, but the regulatory landscape does mean there are like nuances between every part. I think where we see the differences from like a state-by-state basis is the way in which people want to utilize it does change, and the
how?
So I think I mean by that like the use cases. So like we have a slightly different demographics across, like the people who tend to use it in California versus people who use it in kind of the South east of the country tend to be slightly different demographically, and their use cases then are often different. Like, so they're, it tends to be more budgeting for their family in the southeast versus individually. So there are some differences there, and I think like that doesn't mean the product or the regulatory changes, but actually from like a marketing and growth perspective, it is important to try and understand, or it's really vital to understand like what are you selling to these users, why does it benefit them, and like, that does change across the country.
This panel is fairly unique in that we have a growth executive and a finance executive sitting together, trumpeting the merits of expansion to the US. And so can you two maybe talk about, or maybe live reenact if you would like to, what those conversations between your two functions look like, especially around a topic as often contentious and expensive as US expansion can be?
I can say, I actually think that we were kind of, you'd imagine we would have been like the CFO and be like at heads with it, but actually we were like quite lined up, right? The way in which we want to grow is very efficient. So we didn't take a base of like, hey, give us lots of money, we're just going to go and grow and hit some numbers. Like, it became very clear early on that the unlock for us growing is making sure it's efficient. So it's like a lot of our work was how do we make sure like our return on ad spend is super high so that we can unlock funds. So it was very much we're going to do a testing period. In that testing period, we're going to prove out that this is going to be good value for the company, and then we're going to go after it. And that's actually...
Okay, but you do the testing period, it looks good. Yeah. And then you go to the head of finance and you say, I need a few $1 million to expand internationally. How do you do that conversation?
So I think we just say, we bring it back to the company target. So we know as a company, we want to grow like between 2 and 3x a year. We want to keep that going. If we want to do that, we can step through and say like, how much of that is going to come from new business? So if we want to do that, how much we need to spend to get there? And if we've got like strong analytics and strong understanding of that like payback loop, you can say with some like pretty good confidence, we want to get to this scale. You go 3 million, that's going to result in 6 million. That's what we need to get there. That unlocks, and then you just have to be like super vigilant on the check-ins to be like, everyone's going to say, hey, give me 3 million, I'll give you 6 million, right? Like that's pretty easy sell, but you've got to be like super vigilant and aligned on like how do we check in on that, and how do we make sure that we are seeing that come back through, and if that's not, then we need to change pace.
Yeah, and I'm curious actually for both of you, and we'll come to you in a second, but I want to stay with you, Chris. It's just that payback period, anything you can kind of share on that, because I think part of the problem is you can articulate a massive market opportunity, you can articulate a plan to get there, but you see companies that were planning to have a payback within a year or two, and now it's year 4, and do they keep spending, do they stop spending? Like that's a real challenge.
Yeah, so I think for us, like I guess I can share that we brought it down from 18 months to like under 6 during this time. So like we knew as we got there, like we were in a good spot. I think the way you do that is it's not like a growth problem. As a company, you have to align around like, here's our payback loop, this is how it's going to work. Then the whole company has to get focused behind that, because some of it's the marketing spend, some of it's your product innovation, some of it's your conversion flows, like all of this has to sit together. So I think like that was a good shift for the company to say, okay, this is how we're going to grow. This is what the key drivers are. The whole company needs to get behind that and then work through them. And that brought our payback period down as we scaled, which is obviously good.
That's amazing. And maybe a side note to the investors in the room, it sounds like consumer businesses are incredible, and why am I building something in B2B? 6-month payback period? Incredible. Frank, can you tell us your side of the table in those conversations?
Well, if only Q4 was budgeting season. I mean, look, to me, there is no difference between deciding on a budget to go to the US or to go to the Netherlands or to go to the UK or to go to Australia. There needs to be a compelling reason on why there is a limited resource being spent on something. And the beauty of being a private firm is you can be more flexible in terms of adopting, adjusting when you see things working, because you haven't communicated them to the market yet. So in terms of our end, so if we see that take-up rates and growth is faster, we're okay to be at a lower run rate EBITDA, positive EBITDA, just because of it accelerates and scales faster. So that we can adopt. But ultimately, the question of where to spend money doesn't change whether it's in the US or in any other country. It needs to have a payback period. It needs to
Does it have the same payback period?
No,
is it held to the same payback period?
No, it doesn't have the same payback period, but it has maybe also a different strategic value to the business. So, of course, if you start somewhere new, as in the US...
Can you get more specific on like, how you price that internally?
Initially, our payback periods in the US were 3 times longer than in Europe.
Yeah.
But we kind of knew how they came down in Europe over the years that we kind of scaled in Germany and then also in the Netherlands. And right now they're just about to converge. They're still slightly higher, like 30-35% higher acquisition cost on a unit base, but not like 3 times higher. And I guess that's where you start learning, and you need to have that patience, but you don't need to learn with 100 million. You can also learn with an incremental million and see what it does. So just, I think, taking that time to really understand metrics, to your point, is important. But it is no different on whether this is done in any European market, in the US, or in any other market you want to actually expand into.
Thank you for that honesty, both of you. That was really fun. Maybe switching, I guess, from financial capital to human capital. You've both kind of stressed, challenges around finding the right talent, finding the right folks to set them up for success, the right mix of like local learning. But maybe just kind of, again, we have a lot of people in the room who are thinking about expanding in the US from scratch. And so what would you advise them around hiring, around interview processes? The rumors are always, Americans are more salesy, so don't believe them in an interview. Americans are more expensive, so be prepared to pay up. But can we get a little bit more grounded in reality?
Yeah, I think so. When we started to think about the US, we asked a lot of firms, and there was this common belief: some of the founders need to go there, be on the ground, and manage. And I'm not sure it really needs one of us founders being there on the ground. But it needs conviction and freedom for those you hire to actually deliver or fail. Because otherwise it won't work. You can't have a GM installed somewhere in New York or California, but then management on a budget every other week. So that is say, hey, you spent on this marketing channel, and why haven't you talked to that bank? If there is not this level of trust and understanding that this person can deliver a market, it won't work. In terms of personnel cost, yes, it's more expensive, but everything is more expensive in the US. I think this is just a reality to face. And we're based out of New York, which might not be the best choice in terms of cost effectiveness, but logistically it does help a lot. But to the point, so the leadership team in the US is, these are US executives. They have done this before elsewhere in the US with US firms, and they understand the US market. Of course, we spend time with them, and we spend a lot of time also on the tech side to actually integrate, and them coming to us, and we flying in there. But it doesn't have to be someone of us three, because we're three founders being there on the ground. It might even at some point in time be counterproductive to actually scale.
It's very ironic for me to hear, because my previous company, Nova Credit, our office was in San Francisco, and when we opened an office in New York, I had to move. So it's wonderful that you didn't have to do that in going across a country and an ocean. So how about for you?
Yes, I think I very much agree with the whole, you've got to have the focus and the conviction part of it. I think we again found that there are some roles that have a lot of benefit from being there, but outside of our product org and our analytics, our data science, it's all London-based, and I think there's not a huge win from shifting that over, apart from massive increasing your costs. So that doesn't seem very...
But I guess with the marketing, et cetera, folks, it sounds like a lot of people you work with who are in the US. Is there anything different between them and the folks that you work with here?
Yeah, more expensive. But I think there is definitely, right? I think there is a slightly different ways of working. I think you have to be thoughtful about how you, and what I mean by that is I think the expectations about how you interact with the company is culturally a little bit different. So we did a bit of an adaptation as we had more US folks, and I also think, actually that is the main difference. I think a lot of the others are the learnings that come from them is different, but that's not as relevant.
I think we're now in the market for more than a decade, and there is a tendency of mature firms to say, we've tested that before and it didn't work, so don't try again, kind of mentality. And that's kind of different if you go to a new market. So give you one of the examples, since you referenced marketing. I don't know whether there's ever any customer that came to us in Germany via social media, because we're asking for cash savings and deposits. So it's not the channel for us in Germany. It's very different, and it's very different in the US. Had I brought in my German marketing team to run this, they might have never tried because they said it doesn't work. And so I guess this kind of be okay to learn again kind of mentality helps if you have a certain specific team on the ground that is at least some sort of ring fence from your own organization.
Amazing. Well, it wouldn't be November 5th today if we didn't also touch very briefly on the election. And so I'm going to suggest to the audience members that you can grab these folks individually for unfiltered predictions on what we can expect on the fintech regulatory landscape in the US. Obviously, the last 4 years have had 1033 on the open banking front, a lot of new crypto regulation coming out of New York. So it'd be interesting to hear what you have to say on the regulatory side. But I think that's a bigger conversation. So maybe just one quick, maybe we have a bit more time. So it is so maybe just one quick question then on the present day interactions, which is how have your dynamics with regulators been? You started to talk about, in the UK you had more regulators than in Germany. In the US, that factor is, multiplied by another 50. And so what's that been like?
I think with regulators, as with any other stakeholder in the business, you can not over-communicate. So be super proactive, reach out to them. That's our learning to talk.
In the US?
Yes, because ultimately, if it scales, it'll anyways at some point in time come to their attention. So you can't hide from you can't shortcut regulatory. You need to go there and you need to present and you need to tell them what you're doing and you need to get them convicted. Not sure today is really a great day in terms of helping in clarity on what's coming. But that's also a reality, and we need to face it. So ultimately, the product won't disappear. The actual regulation won't go away. So there is no way you can circumvent that other than being forward-moving and actually trying to talk and communicate to them and tell them really what you're doing. Because a lot of the worries, and that's true for the European market in the initial days, was also misperception on what we actually tried to accomplish. The more we talked about it, and the better they understood it, the more they became a stakeholder rather than a oversight that is trying to stop what you're doing. And you need them as as a partner, even though they cannot win a lot with letting you do things too quickly, too early on. You cannot shortcut this.
I guess maybe we see a lot of reg tech within fintech. I suspect your business is not strictly speaking that. However, I imagine that regulations such as treating customers fairly, consumer duty, have been really positive tailwinds for your business in the UK. I would imagine in the US, which is not outcomes-based regulation at this point, you're not seeing similar tailwinds. And so possibly when you're meeting regulators, you have a different goal in mind.
So I think I'm not a regulator, but I think they hate surprises. So to avoid that, just be clear what you're doing and why you're doing it and make sure they are aware of that because they will eventually anyways. And if it's at a later stage, it doesn't help you because then they might just get a misperception of what you're actually trying to accomplish. UK is specific though. I've never seen any other regulator trying to dictate to banks what they should pay in terms of interest rates to their customers. It's pricing policy. It's just in my with the bank, but of course it does help. Because all of those headlines in terms of bank rates aren't really passed on and consumers aren't benefiting from a rate hike cycle. Of course, they helped us in our business, but it's a bit of a rather specific UK approach, I'd say, which we haven't seen elsewhere in Europe to the same extent.
What about you? And obviously, you use open banking in part. Two very different approaches between the US and the UK around open banking. The US recently passing new laws. What has been the dynamic with regulators for you in the US?
I think it is kind of similar in the sense of proactivity is something we've really grown into, and the investment internally in making sure we're well set up to be proactive in that space has been a big shift over the last few years. So I think actually a lot of what you said about being proactive and trying to avoid surprises is there. I think that's really been the big one for us. I think the only other...
Can I go back to the day one question then? So you set up some regulatory licenses, you do some tests, you get some budgets. Where along that is the setting up meetings with the CFPB and how frequent, what goals are you trying to get out of that?
And I say this as a person who doesn't go to those meetings, so that has happened.
Lucky you.
Yeah. So but that happened fairly. So once we've had some conviction on the scale, so proactive, but not in the very early days. Once we had conviction that we've got good scale here and we're going to continue to scale. And kind of we're going to come to the attention of everybody, regardless of whether we start the conversation or not. That changed the kind of mentality internally, I think, of more proactivity. As it was we're getting to the scale where regardless, these conversations are happening. So there's a lot of benefit from being on the front foot.
Interesting. And then do either of you have a crystal ball kind of foresee changes in fintech regulatory policy in the US or any expected changes from the new administration?
I don't think I guess we expect change. We're not exactly sure what change.
Yeah, so probably increased volatility around a lot of verticals, including that one. But it's super hard to foresee anything.
Yeah. And then I guess if you had one final sentence of advice you would give to the founders in the room who are thinking about, should I go to the US? You've talked both about testing and budget, but what is one piece you'd want to leave them with?
Answer the question why you want to do it yourself. and not because the investors tell you it's a great market. Yes, it is a great market. It scales super nicely if it's successful. But ask yourself, why do you want to do it? And do you have the capacity to actually do it whilst there is a lot of work to be done in your home market? It might end up you switching completely to the US, which is a probably extreme case. It might end up it's not working 3 years and you have to defend it. So it's never going to be easy. But that is just the reason why you need this answer yourself very clearly on why would you want to go there.
Yeah, I think it's conviction. It's like you've got to be a high conviction that it's gonna go after it, because from that you'll have the focus. If you have the focus, you'll really put the effort into it and like live or die by making it a success. And I think that is that's what's happened.
We're ending on a go big or go home note, it sounds like. But thank you both so much. And if I could ask you to join me in a round of applause. Thank you for being so open.
Hi, I'm Yulin. I was, until a few weeks ago, CPO at Onfido. Thank you so much for being so open. I'm curious given the US is a huge market, right? Obviously, 56% of world GDP. What is your company goal in the next couple of years of the US revenue as a proportion of total revenue?
Yeah, so I can start with that. So the good news of being private is we don't need to have a communicated segment of like this is US in 27 type of answer to this. But going back 10 years when we started the business, I was saying this is a German thing. And we wanted it to be much larger than that. So we didn't want to be overly focused on a single market. And ultimately, I think if the US isn't 20 to 30% of revenue, it's probably not worth the efforts.
Yeah, I guess similarly, we don't think about it in terms of like how much of the US can we take. It's more from a internal standpoint, like how do we make sure we're growing at a rate that we feel will get us to the scale we need to be kind of to go global. So it's very much from a, like what rate do we need to achieve rather than taking the total of the US.
Got it. So I guess if I were to follow up then, but in that context, given that the US is such a big economy, then although like you've obviously scaled there and are doing pretty well there, what you're de facto saying though is that the market share you're aiming for in the US is still considerably lower than the home markets. And what's kind of the reasoning behind that? You don't have to give me exact numbers.
Yeah, no. So, but that's the beauty on just speaking on our model, savings. So Germany, there's 2 trillion in savings on bank balance sheets. Our 70 billion does not mean a meaningful market share. If it's 3x 70 billion, it's not a meaningful market share either. So I think the beauty of the market is so huge that we're not needing to get 10, 15, 20% of the addressable market. Whatever the percentage number is, it'll be a super sizable business. What I was rather referring to, if it's not a meaningful part of our revenue composition, of our growth, then it's just too complicated efforts to have this market, time zone differences, a cost base to actually operate both.
Got it, that makes sense.
Cool. I guess like as it is our main market, the idea of leaving is less attractive. So like we will be there, but I think it is again like the size of the market's so big that we're confident we can continue to scale like for years to come. So it's not a question of how much. It's just like if we keep scaling, we'll still be successful, I guess.
Yeah, I've got a question. Hi, so Jasper Reiser from HSBC. So when you think about the US and your kind of platform there and how it's growing, and then you think about your kind of exit strategies, whether that's an IPO or M&A, how does the two kind of correlate? How do you think about how one drives the other?
And Clio certainly has never made any public statements in the news about the UK IPO market.
No. Yeah. You can see why Barley's not here. Well, I think for us, it's like we believe that to basically succeed globally and to lead to an exit, we need to crack the US. So in our strategy, I guess, for that, it's like cracking the US becomes fundamental for being global, and that becomes fundamental for an exit potentially. So like that's how we're playing through at a high level.
So to me, so fintech has seen 2 super extreme shifts. So until 2020, 21, growth at any price. Payback periods, yeah, it's a nice conversation, but like let's just simply grow as fast as you can. And then actually turning to, we need to be profitable by tomorrow because we might not get the next round at the same terms. So super heavy shift into the other direction. But what it did is that there is a handful of businesses in Europe that actually scales now very, very profitably, and has also, I think, seen at the same point have the beauty of being private whilst doing that to scale to a business that's worth being listed and not like rush into an IPO market way too early on. But what I do think is there will be a lot of businesses coming to market whenever it opens up. I mean, you're the banker, so you probably know better than I do about when that is going to happen. And we'll be surprised about the size of some of those businesses that they kind of grew into privately. Ultimately, as a founder, I think you shouldn't worry that much about the exit strategy, but you just build a great business, and then there will always a multitude of exit strategies pertaining to the kind of business you've built.
But if we just forget the US and Europe for now, and you're thinking, if you want to grab one more interesting market, which one? Not why, just which one?
It's hard.
So I mean, I know that the model works in some of the other jurisdictions. So like Latin America, it's not a market, but it's at least a region where there is early copycats of what we were doing and trying to intermediate deposits. And then usually it comes, so if you speak to investors, the usual answer is India because it's the largest democracy, and there was a lot of like wealth and new affluent clientele coming up. For us, to the earlier point of market share, we'd be focusing on the US and Western Europe for the foreseeable future.
I think ours would be South America, so Brazil, because we think there would be an opportunity there. But I think the domination of some of the players there would also make it very hard for us.
Sorry, I've been looking at this side of the room, but if there are any questions in this area too. Or I guess anyone who's had the inverse journey of a US company expanding to the UK who'd like to share some comments or contrasts from what they're hearing today. Not to put James Baston Pitt on the spot, but...
Hi there. So yeah, can you hear me? Yeah, James Baston Pitt, so the general manager of Alloy in UK and Europe. The word general manager came up as a big bad thing. I'm a little intrigued by that. I guess we're a couple of years into our journey. So far things are going well. I'm intrigued to see at what point of inflection of pain did you feel? Was it like the product market fit phase? Was it the next stage of going through probably that bit about focus, actually. At what point does the business core turn its focus into thinking of a new market, a new region being really fundamental? Because right now we're in this really exciting position with an Alloy that we have autonomy, we're growing, we're good adoption in market. But ultimately, I know the next phase is turning a business from a US-centric business to a global business, and that's a big shift. That's a big change in a business. When did you see the right point to do that? Or any anecdotal advice when it came to going in another direction?
I can say from us, so I think for us, it's when the pain points started to occur of having a UK focus. So we started to see the pain points come in terms of split of resources and kind of that focus across the two areas became a problem. And that then made it clear that we had to like shift the focus of the company from being kind of split to being US first.
Yeah, I think for us it's more of as soon as you've seen this is maturing and this is kind of somehow working and you somehow feel you have a grip around it, you can start thinking about new markets, and then you always underestimate the complexity that does bring along. I mean, you always think it's going faster, it's easier, it's a more clear-cut route, and I mean the complexity and time you spend on it is always like 3x what you think it is. So we were a bit reluctant to do it too early on at too large scale, but then figured it needs a dedicated team, otherwise we'll never end up doing it. So it's a bit of this kind of fighting with yourself in terms of how much resources versus if you're not spending enough on it, it's never going to happen conversation.
I think that's a really... Oh, one last question.
So, sorry, Mark at Trade Finance Global. So just in terms of acquiring teams in the US, how did you go about it? How did you incentivize and how was that structured? If you can talk about it.
Yeah, so technically we acquired a team in Madrid, and yes, they are incentivized, like group share program that we operate. I think with overall incentives, it's complicated in Europe to set them up, and they're also heavily taxed, of course. But I think there is no more powerful tool than ownership that you can give to employees at every level, at every seniority. And I think it's done too infrequently and too little in Europe. So that's kind of a more general comment to it. And I would avoid having multiple different programs to the extent that you can avoid that, because it just always at some point in time generates conflict of interest. And if it's in budget season and someone has a top line target, the other one is kind of an EV target, it doesn't work and end up quite well unless there is clarity on the incentive structure.
Yeah. And maybe just a plug there that I think there's nothing worse than a local team finding out their US counterparts are getting more equity than them. So benchmarking and fairness is super important. But yeah, James, I loved your question also, and just the point that, crossing Atlantic is one stage, and then ultimately, the pursuit is also building global businesses. And so proving it in the world's biggest market is just the beginning. So thank you again to our panelists for being so inspiring with your success and so open with us today. One last round of applause, please.